Max, some of you will have seen. Yeah, if I can grab this one.
Hello, hello, hello.
Max has already done his turn this morning, and it was fascinating, all about interoperability of blockchains. Dennis here. Dennis has got a lot to say, so I'm going to make sure that he doesn't keep the mic, okay? Dennis knows more about investing in crypto than I will ever know in a lifetime. So my job is to see if I can catch him out and make him look stupid. But I don't think that's going to happen. Right, Alex from Toronto. Yeah, Alex and I spent quite a bit of time yesterday talking about stuff, quite a cerebral approach to this. And we've covered a lot of ground on our own. And then finally, Mike. Mike's a very mild guy. My job is to try to draw Mike out here and get him to say something that he's going to regret because it's being recorded. I don't think that's going to happen. I'm not sure where this is going to go, and I'm not sure how long we're going to do. But I'm going to kick off by asking about security tokens, okay? Why should anybody invest in a utility token? That's the question I asked earlier, and I'm going to ask this panel of investors the same question. Are you guys now, going forward, only interested in investing in security tokens? We'll start here with Alex.
Sure, so my name's Alex. Am I on here? Yeah. I run a venture capital fund called Bicameral Ventures. We raise money in crypto and invest in crypto directly. We take our management fees in crypto, we take our performance fees in crypto, and we essentially are running an entire fund end to end from start to finish. We probably have about 85% or so of our operating budget that runs entirely in cryptocurrencies. We work with a wonderful technology called Aeon that is an interoperability platform, so somewhat similar to what Max was discussing earlier. And so we've been in operation for about 6 months now and deployed several $1 million of capital all across the world. Tel Aviv, one of our portfolio companies, is floating around over there. Windminer, check them out, highly recommend. And so the security token versus utility token is it's obviously an interesting debate. And there's the utility token inherently is more interesting because it's more of a game changer. You can put logic on those. You can derive the actual decentralized transactions and the proxying of trust that is what we're all trying to create here with utility tokens. Security tokens in their most basic form are what I kind of refer to as paving the cow path. It's a new technological version of something that's existed for a long, long, long time. Now, when you start talking about if you can add in automated dividend payments, if you can add in extreme tracking of a shareholder register, there's value and there's a lot of interesting things that you can do with security tokens. You can put on-chain payments, you can put on-chain dividends, you can get a lot more granular into how a traditional equity works. But I think if you can start kind of hiving off security tokens into just tokenizing an equity, versus the aspect of if you want to sort of cover your ass and declare a utility token as security, those are very, very different things. And so I think the security versus utility debate always sort of gets wrapped up into, are you just tokenizing an equity or are you actually doing something different?
Okay, that's a good answer. We'll come back once we've had a general opener.
I think
hang on. One more of those, you get sent down for 5 minutes. All right. We'll come back to it when we drill into what a security token would look like, because I think the answer is you can look at different types of security tokens. All right, Dennis, utility dead or security tokens for you?
Well, the first thing is that you have to understand is that if you want to be subpoenaed by the SEC in the United States, do a utility token.
Yeah.
At the end of the day, if you're not registered, you're going to be subpoenaed, and you're going to spend 90% of your fucking... Oh, I'm sorry.
No, you can't say that.
90% of your day...
On lawyers. Yeah, good.
90% of your day responding to a subpoena.
Yeah.
So, at the end of the day, if you are a legitimate utility in every sense of the word, you better register if you're going to do any kind of business in the United States. Because at the end of the day, They are issuing hundreds and hundreds of subpoenas of everybody that is not registered. So it doesn't matter how valid your case is. I mean, your case could be unbelievably valid. And at the end of the day, they will subpoena you and they will prosecute you, and you will spend a significant amount of your days, time, and money responding to the SEC's witch hunt, is which I would call it, of and everything that's
Okay,
not registered
Dennis,
is just bad.
But not every utility token touches on American soil.
No, for sure
Right,
not.
yeah,
For
okay.
sure not. I mean,
Yeah.
If you're outside the United States,
You're
you're
clear.
perfect. I mean, I think that you can operate literally. I mean, easily. Obviously, I've got 25 years of investment banking experience.
Yeah.
I mean, I've started two of the largest regional investment banks in Chicago. I ran the SoftBank E2 Capital office in Chicago. I've raised a couple of $1 billion. I know what I'm talking about. I've spoken at 50 venture capital private equity conferences. I've done a dozen blockchain conferences. I'm doing another 12 in the next 30 days. And
Okay, so would you invest today in a utility token?
not,
or,
any,
yes?
not anything.
Yes or no?
Yes.
No,
Right.
if
okay,
it touches the
thank you.
U.S. soil.
That's it. Okay, great.
We have.
Okay, Mike.
Hello. Before lunch, I guess we're
closer
sitting here
to-
and
yeah.
trying to talk about utility versus security. But I got involved with the whole crypto world in March of 2016 at a conference, and I had to look up on Wikipedia the difference of tokens. And they were talking about utility, security, and membership tokens, which nobody ever talks about membership tokens. The first ICO that I got involved with is called TOS, Token as a Service. It's a fund. It was the first crypto hedge fund. And it was a membership token. We said we'll sell all tokens, and those that we don't sell in a 30-day period will burn. So we raised, in March of 27 to April 27 last year, we raised 7.6 million, 3,974 investors or wallets that sent us money. Back then, there were 3 ICOs in March and 7 ICOs in April when we finished. We got listed right away. We became liquid right away. And what we said we would do with the money is invest in ICOs. And naturally, we invested in as many ICOs as we could get our hands on and get good discounts and have a good position in it as early as we could. But the exits were always within a month of making the investment. So we made $10 million in investments and 35 different ICOs. 100 grand to 2 million was the biggest one. That one we still have the position. That was a later investment made. And nobody ever talks about membership tokens because nobody figured it out. And we
Mike,
had hundreds of
where are
funds
you-
come
where-
to us.
Where are you based?
The fund is a nonprofit domiciled entity in Singapore.
Right.
The team of 40 people now is all based in Ukraine.
Okay.
But what's interesting about this is that we couldn't invest in security tokens even though we looked at them because there was no exchange that would list them. So there was no way for us
Yeah.
to get out of it. And what we told our investors is that every quarter we will take 25% management fee for us, 25% of the return on assets we'll put back into the fund, and 50% will pay out to you in dividends. And back then people said, that's illegal, you can't pay dividends to anyone, so we called them payouts. And we had no US investors,
No.
and we paid them in Ethereum. And we ended up paying on an 80-cent token at the beginning of our ICO, or $1 towards the end of the 30 days, we paid $2 over the next 4 quarters. So we doubled the money, and the token is still worth $5.50. So the story behind this is that here's a fund that took in money from 4,000 wallets. We invested it in 35 ICOs. We exited from most of them. We provided 62% return on assets first quarter, 72% second quarter, 420% third quarter, 460% fourth quarter, and then of course we lost money in the 5th quarter because that's where the market went. And of course we enjoyed all this as the market
But
went up.
did
So
you sell
today,
that? Did you sell that as an investment?
what, the fund?
Yeah.
Of course.
Right.
Says, give us your money.
Yeah.
We'll manage you better than you can, which was the funny part about this whole operation, with no background in investing for most of the founders. And then we provided this amazing ROI. In the meantime, we also did daily trading, about 50,000 trades.
Who were your clients? Were you selling to retail, small guy? private
So-
office,
so-
institution?
Yeah,
Unknown.
it wasn't like that. It was like this. Here's a press release. There's 3 board members joining. We went to 3 trade shows, and first day of the ICO, 100 people sent us $1 million altogether of Bitcoin and Ethereum and Tether.
Free money.
No, it's not free money. That was what it was back then. And we said we'll invest it in ICOs. We'll manage it better than you. Here's a crypto auditing technology
Yeah.
that you can see all trades. You can see full transparency. Every week we put a press release. We invested this much in Ethereum or in Bitcoin, equivalent to dollars of that day, in this company, and this is why. And because we had 35 such press releases, the value of the token, and again, it's a membership token, it went up and up and up to $12, and then of course it collapsed with the market because it's,
Okay.
it's just the way it is.
Yeah.
So today we're only looking at security tokens because everybody else.
Right.
This is where everything is moving to. But
Yeah.
we couldn't invest in security tokens because there's no liquidity. Where you,
And there are no exchanges. We heard
There
earlier
were no
today,
exchanges,
There are
right.
no
So we got
exchanges yet
involved
for security tokens.
with the Gibraltar Stock Exchange because in their mission they said we will be the first blockchain exchange to allow security tokens to be traded, fully regulated.
Yeah, okay.
We have the whole government
Mike, I'm
behind
going
us.
to cut you off there. Thanks, because you've answered the question. Thanks very much indeed. And then finally, Max, your perspective. Would you invest in utility tokens, or is it only equity going forward?
Okay, so Anshwen is the company that created Zilliqa,
Yeah?
and so Zilliqa is a public blockchain platform
Yeah.
today. It is a utilities platform,
Yes.
and we thought very, very carefully when we launched Zilliqa about the structure of it, especially given that we are based in Singapore.
Yeah.
The Singapore government does have a small part to play in Anshwen, the parent company, and so we had to be incredibly careful about how we looked at this dilemma.
Right.
And for us, because we've built a protocol, because we're building infrastructure and looking to facilitate people building applications.
That's a utility.
For us, it's utility.
Yeah.
And we received a tick box from all the right people to say that it was a utilities token. So yes, I would invest in tokens that are true utility. Moving forward, we're very, very excited about what's happening with securities tokenization for all the reasons that my colleagues here have already talked about. And we're really very hopeful that Zilliqa can play a big part in helping. One particular space that I'm excited about is the kind of the private mid-market space, where I think the securities tokenization plays a huge part.
Can I just jump in here? I mean, what is the threat of registering a utility token opposed to just doing a utility token? I mean, it seems to me that all the institutional investors that I've been speaking with, regulation risk is paramount to what they're most most concerned about. And I mean, if you're a legitimate utility token, why don't you just go and register, even though that you don't have to? But I mean, just to have the cover so that you can actually get the institutional money with that cover or that comfort level to where that they feel comfortable to where that the deal's not going to be unwound or that you're not going to be subpoenaed by some.
Do we have another mic?
By some other part.
Is there a second microphone? Yeah, thanks, Dennis.
So
we had 2 before.
The worry is that you murder the utility of that token by registering it as a security. Because if you're not an accredited investor in the U.S. or if you don't fall under a qualified purchaser
Bring it closer
exemption
to
or
you.
any of those things,
Yeah.
then you can't use what it's actually for. And so the actual value of the token, of being a method of exchange or of having decentralized logic built into it, of being a value transfer mechanism, if you need to go, okay, well, is grandma getting it? Am I putting this through an exchange that'll end up back in my local area and then I'm in violation of securities law? If you declare it as a security, you have to treat it like a security. You have to essentially run your business on private Apple stock or RBC stock or something like that. It's and we deal with this because we essentially use crypto as our functional currency. So we've really thought through a lot of these and had some very interesting late night conversations with our lawyers about how to kind of run a real business on crypto. And if you declare it as a security, yes, you have the cover from an investment perspective, but you kill a ton of the utility that you can actually generate in this. And you prevent people from being creative with how they can use the token. I mean, Ethereum wasn't started as a method of payment. It was started as a decentralized logic execution. But because it's a utility, people can use it for X, Y, Z, a ton of different use cases, which stacks value on top of it.
Okay, so what I'm hearing... Okay,
yeah,
no, enough.
I just want to
Whoa,
respond
whoa,
really
no,
quickly here.
No, no, right? I'm in charge. I love it being in charge. Right.
I object.
Good. Sit down. Take your hands out of your pockets. What we're going to do is now, we're just going to move the conversation slightly, because that was an interesting warm-up. What I really want to talk about are stable coins. The reason I want to put stable coins on the agenda is because I've heard a lot recently about stable coins as the great new thing. And frankly, I am very skeptical because I don't understand them. So I want to go down the line and get the panel here to explain to me, because I'm an idiot. As I explained to you before, I'm from Leeds. We've only just got hot running water and we eat bread. So explain to me, if you would, in simple terms, why I should use a stable coin. Who wants to start? I don't mind who starts. Anybody?
All right.
No, nobody wants to start because no one knows the answer.
I'll start it off.
Here we
it's
go.
Fine. So
Okay, Alex.
the way that I think about stable coins
Yeah.
is that it's a interim measure to hack adoption of crypto. You can't use crypto often as an end-to-end rail to run your business because it's too volatile. You need to
Yeah.
know for your profit margins, for your forecasting, for your banking, for your loans, for your equity holders, for everybody. You need to know if a dollar is going to be worth $1 tomorrow, if it's going to be worth $10, if it's going to be worth 10 cents. Now, it's a bit of an interesting dichotomy because adoption by definition leads to lower volatility. One of the big reasons of volatility today is that there's non-financial driven selling. So somebody needs to pay rent. They don't care if the market's down 20% that day. They're selling regardless of what's happening so they can pay rent. When you can get to the point where you can earn money in crypto, buy groceries in crypto, pay rent in crypto, pay your developers, pay your lawyers, pay your marketers, and you don't need to actually have that needs-driven selling, that by definition takes volatility out of the market.
Okay, Alex, so as I understand it, as you explained to me yesterday, there are three ways
Right.
you can build a stable coin. You can tie it to fiat, you can tie your coin to crypto coin, or you can
over-collateral.
build a smart contract which is based on supply and demand. Is that fair? Yeah? Okay.
Okay.
Right. Stable coins.
My take on this whole thing is a completely different take. I mean, the whole idea with this site going, everybody's looking at Bitcoin. Bitcoin takes 10 minutes to settle. It takes 10 minutes to transact, takes hours to settle. It's not a viable fucking. I'm sorry.
Here we go again.
A viable coin to be able to use. To where you walk up to the grocery store. It's not like using a credit card. So the coins that are going to be the most usable in the world today are going to be the ones that transact immediately, in the worst case scenario, in 4 seconds, and they're going to be safe. They're going to be transparent. They're going to have the immutable ledger so that it's going to be the most usable coins out there.
Dennis, answer the question. I can do this when I'm prosecuting. I say, answer the question. Look at the audience. Answer the question. Do you believe in stable coins?
Yes, I believe in stable coins, but I believe that the stable coins of the future are not the stable coins that you think are that are happening now. I think that there's an evolution, a maturing of the market. I think that there are other coins out there that are going to be significantly more usable than the whatever's cachet now.
Okay. Would you ask your investors or tell me, this morning I said, let's say Anti-Ida croaked, leaving me £1 million and I want to stick it into crypto. Okay, I come to you. Would you tell me to stick half of Anti-Ida's money into a stable coin?
I would tell you to put every single dime that you have into digital currency because at the end of the day, it's inevitable. Everything's going digital.
Yeah.
Everything is
Okay.
going to be a cryptocurrency or a digital currency, and the days of cash
Thanks.
are over.
Okay, but would you approve 20% of my Auntie Ida's money going into a stable coin? Yes or no?
Absolutely, yes.
Okay, right. Is
I
the-
mean- I mean,
okay,
I
oh,
mean-
whoa. If the stable coin is going to be kept stable by printing more coins when the price collapses, isn't that a Ponzi scheme?
Well, I mean, you're saying, I mean, printing more coins. I mean, once the coins are issued, they're issued. Then the only other way that you create more coins is by mining, and mining is a costly process.
But how
I
do
mean,
you keep it stable? The whole point of a stable
well, I
coin,
mean, it's just
when
like
it
everything
drops,
else. I
you
mean,
ramp it up.
it's building audience, building audience, building audience, building audience, and then a certain percentage of those people will convert to buyers. I mean,
No. The stable coins that I've looked at say as soon as the price dips, in order to stop the dip, we're going to heave a whole load of stable coins onto the market to get the price back up to a So you buy. All right, okay, you buy. So I don't mind which, but the point is you manipulate the price in the market to get the stability. Is that not a Ponzi scheme? Okay, not sure. Mike, what do you think? Mike, you've finished. Mike.
So February of last year to February of this year, as the market went from 20 billion to 800 billion, nobody wanted to talk about stable coins. We had one portfolio company that attempted to raise money as a stable coin. They had all the arguments and buying and selling and stabilizing it, and they barely raised $2 million in Bitcoin a year ago. So it depends when you're talking. Today, everybody wants stability, right? As we all saw our net worth plummet from what it was in February to what it is today, 80% off, we all want stability. We want to be able to pay the rent and not worry about how much money did I raise and did that money just evaporate. So yes, stable coins are needed and there should be more of them. They're very hard to create, and it's all based on the community adopting them and using them. So that's the chicken and the egg situation.
So you both guys have got no real concerns about the principle.
As short-term investors, we don't want stability. Yeah. We want the hype. We want to be able to have the knowledge when to buy, when to sell.
Dennis is itching to come back in. So, go on, Dennis.
I mean, we're back exactly to where the collapse of the internet was, to where that all these internet stocks went from hundreds of millions to billions of dollars to zero. Pets.com and all these other things, and all these assets were unbelievably valuable, but everybody was so shaken by the market and the plummet of the market that nobody was buying anything at that point in time. So the idea is that, if you take it from a perspective of history, the 2001 crash, the 2008 crash, the guys that held, the people that bought then, were the biggest winners ever. The people that sold were the biggest losers ever. So the whole idea is that we are in an economy to where that blockchain is like going from a fax machine to the internet. And if you don't think that that's going to change everything in the world, yeah, then there's something seriously wrong with you.
Yeah, the trouble with that, Dennis, I lost my shirt on internet stocks. I had a load of them. I had a lot. And then all the idiots came in with Pets at Home, this one at home, that one at home, and Cisco and all the others completely wiped out, apart from Amazon. Amazon paid for my flight over here. Please say. Thank God I bought some Amazon. Right, okay. Max.
Okay.
Stable coins, and then we'll move the conversation.
Yeah. Okay, I'll be brief and to the point.
Yeah.
I think the theory is great.
Yeah.
But I think in practice today, we've got to evolve beyond where we're at. So practical examples. Look at USDT. Okay, you look at USD Tether over the last 2 weeks.
Yeah.
Look at the Gemini dollar, which is what the Winklevoss twins have just launched. It was at 1.18 to the dollar Last Tuesday, I think it's now back to about parity. USDT was below parity. So, you know, there's also growing volatility amongst these so-called stable coins. And in analysis of how stable coins work, there are collateralized, semi-collateralized, and then a structure that looks a little bit like a bond-backed collateralization. If there are huge runs on the market, then these things collapse.
So the securitization is an attempt to flatten the curve by buying and selling over a year.
Yes.
Have I got that right?
Yes.
Yeah. So that's well and good, provided the market doesn't tank after a year, because there's
Correct.
only so long that securitization will last for.
Correct.
Is that right?
But we're thinking about this way too much as investors, because stablecoins aren't what you invest in. They, by definition, don't go up in value. So stablecoins is
yeah.
a method for adoption.
Yeah.
It's a method to plug into a project to make it actually usable in what I think is the short term. So I think there's really interesting ones, but we get pitched on stablecoins as a venture capital fund all the time. It's
Okay.
like, well, that's wonderful, but how do we earn the money to justify the early stage technology risk here? So I think there's a lot of different ways that people are thinking about it. And there's a lot of different good ideas for it. I think they're necessary in the short term to get to where they're not necessary in the long term.
Okay, Mike.
I just want everybody to understand. It's like looking at all these coins on a daily basis is like a form of mental masturbation. I mean, it is. I mean, this is a vision of the future. This is a different way of looking at things, of how things are going to transact. Every single thing. Every single transaction, every single recorded bit of information is going to be on blockchain. That is an absolute fact. It may happen next year, it may happen in 5 years, but at the end of the day, that is all happening.
Okay,
now,
Mike,
how much of it's going to go to cryptocurrency? We don't know. But at the end of the day, it's like you have to have a bigger vision of this. If you're a trader looking to buy and sell on a second-by-second basis, you know, that's not our gig.
Okay, thanks.
Our gig is that there's a much bigger vision here.
Mike. Yeah, one Mike.
Right, just like he said, as an investor that needs to provide short-term returns to our investors, I'm not interested in stable coins. I'm interested to just look at them, analyze them, understand them personally. But as an investor, there's no up and down. There's no way to make money with it. For the industry, of course, it's needed to pay rent, and as we spoke so many times, you need stability to pay salaries and so forth. So yes, they are needed until one point. Well, they will not be needed
So they're
anymore.
a type of
So it's
utility,
very simple.
really, to keep...
Yeah, they have the utility of...
Okay, right, we'll park that. I'm going to pose another question. Totally right field. You guys are investors. Should I, if I'm going to set up my own venture fund with Anti-Eda's money, and I'm going to attract some money from other Anti-Edas, should I be investing in stocks, or sorry, not stocks, coins or securities which are based in London, New York, Paris, and the like, or should I be going for the offshore areas, Malta, Cayman, Gibraltar, and the like?
My advice would be get in early enough that you can talk to the teams and make the decisions with them. So move where makes sense. And what's amazing about crypto is that it, by definition, is a friction reducer. It targets the digitized trust that we lose when we do international business. And so it allows people to have this sort of global mindset and this global view of where they can work in a regulatory environment. So it's going to be very malleable, it's going to change, and it's going to be, you need to be flexible and stay flexible. So by targeting or by going into a project that is like, I am committed to this regulatory regime or I'm committed to this, get involved early, make a decision with the team, get involved to where they can actually go.
So the team is more important than where the coin is going to be released.
Yes, the team will start somewhere. The team will operate somewhere. I mean, the coin will go somewhere. But the team, the team who's involved is what's going to create the end
there's
project.
hang on, I'm not I'm not finished yet. Not finished yet. Sit down. I'm sure you have. I've got a friend who's a lawyer who fell out with somebody very badly on a panel not long ago, who said, as an investor, you must be crazy to invest in one of these offshore territories because they've got no proper legal system. Forget the regulatory environment of the sale. They ain't got no courts. They ain't got no judges. And you've got no chance of getting your money back when it goes tits up. Excuse the French, but that is the legal definition that we use in Leeds. Right. So he, as a lawyer based in London, is advising his clients, you do not invest large amount of money in offshore investments.
That's just so blanket, though. Like to not invest in offshore investments is such a black and white way to think about it.
Yeah.
And go to the country, do your diligence, meet the lawyers, meet the infrastructure layer, figure out what's the blockchain fairy dust, and figure out what's actually being created as an infrastructure.
Okay, I think this guy is. I will come back to you. Just let me finish this conversation. I think you're saying, hope it doesn't go to litigation. Trust your judgment and then walk away
Of course,
if it
we're
goes
always
wrong.
hoping it doesn't go to litigation,
Yeah, okay.
but meet the lawyers and understand the
Yeah,
framework.
okay.
So I guess that's the thesis of what I'm saying is understand where you're actually going, but be flexible and be open because this is a crazy, awesome new market that shouldn't be defined to where it has historically been a real environment.
To summarize, the risk of litigation wouldn't put you off going to Cayman, Malta, Gibraltar, or wherever.
What you're saying is complete insanity because you have, you have all these largest insurance corporations in the world operating in these offshore corporations, and they are doing billions and billions and billions of dollars in transactions. They're not doing it because that there's no law or there's no judges or that they're being paid off. They're doing it because it's the best place to do it with the least amount of taxation, with the least amount of regulation.
Dennis, they're doing it because there's no law, there's no judges, and there's no taxes. That's the reason why they're shoveling all the money into Cayman.
Well, at least that you don't have somebody with a legal agenda to try to shut you down from doing what you're trying to do.
Yeah.
The whole idea is that they're embracing business. They're trying not to negate business. They're not trying to stop business. They are that the doors are wide open and they're like going, we're open for business. Let us help you in every way, shape, or form. I met the Prime Minister from Malta. I met all the top people from the Malta Exchange. I met all the top people in Malta that are the largest investors. And believe me, they are open for business.
Oh, yeah.
When you're talking about institutional investors, the biggest risk to them is regulation. To where that they could be shut down, they could be subpoenaed, to where that 90% of their time and their effort, the companies are going to be spent, fighting a subpoena from some regulatory body. These offshore companies are doing the opposite. They are sitting there going, how can we help you?
Okay, Dennis, thanks. If you pass the mic, yeah. Okay, guys.
I think that's enough for me.
So, 35 different ICOs that were from all over, Cayman, and you could name the jurisdiction, and they were there. So, as investors, we look at that as in the diligence, but it's the team. The team is the only thing that matters. The beginning, and the middle, and at the end. The jurisdiction could be changed down the road if it suits a better purpose to be in Singapore than in Switzerland and so forth. So, and by the way, the tokens are not issued by that jurisdiction. They're just, there's just a legal entity, whether it's a for-profit or a non-profit for banking purposes.
Yeah, because Malta has done everything right. They've designed a new regulatory framework, and they seem to be serious about it. I think the question mark over that is, are they going to enforce or not, actually? But there's no doubt that Malta are making a very serious attempt to become the centre for European blockchain,
Well, so far it's
especially
a very
post-Brexit.
big hype, so
Yeah.
They haven't issued the regulations yet.
Okay, let's just bring Max in first. Then I know that Alex would like to come back.
Okay, so again, I think the original question was about practical advice.
Yes.
I would say team first, always.
Always team. Okay.
If we're looking at smart teams, those smart teams will have considered the jurisdictional risks of setting up in Singapore versus somewhere else. So you know, smart teams do understand the risks they're taking in terms of jurisdiction. At a very practical level, I think that any jurisdiction does need to have clearly a progressive regulator.
Yeah.
But then there are lots of other practical considerations. Do the local banks in that jurisdiction, will they bank the proceeds from, you know, ICOs, for example?
And the answer is always no.
And the answer is always no. So we have to look at some very practical considerations as well. But I think that you know, everything that, again, the rest of the panel has said, I would.
I think on Malta, there is one team I know of who are setting up a bank in Malta. The idea is that if you do your ICO in Malta, they will take your money. Because I know other people in London who've raised huge amounts of money and then can't do anything with it.
Yeah, and especially
Unless they're American citizens, because in Malta you cannot have a bank account as an American citizen. They're not part of FACTA.
Because then they fall foul of the SEC.
No, because they're not part of. They haven't adopted FACTA. So
Right. Alex, yeah?
No, just to close the loop on the team and the adjusted environment. I guess we think about it in kind of risk-adjusted terms of there are certain regulatory environments where there is no oversight and you can do whatever you want, theoretically. And yes, you can earn an outsized profit in those returns or in those jurisdictions. But the risk of loss is essentially total if something bad happens or your project ends up changing regulatory environment. And then there's the complete other end where you have 1,000,000% certainty of what the regulatory environment is, but it's very tight, and so your potential for returns are lower. We're looking kind of in those middle places where it's a thoughtful, progressive, flexible, principles-based regulatory environment that makes sense, that has considered the things, but also is pro-business. And so Malta has started to do it right, but yeah, there's lots of
Okay, I'm
challenges.
going to let Dennis answer, and then I'm going to see if there's any questions in the audience
yeah.
that anybody would like to ask. So if you just have a think, put your hand
Yeah,
up. And when Dennis is finished, put your hand up, we'll get the mic.
I'd like to address the topic of the whole conversation, which is like institutional investment into ICOs. I mean, at the end of the day, everybody's looking at risk, and ultimately, you better be settled in a jurisdiction that has settled law. Number two,
Yeah.
probably this is 90% of every single institution that looks at every single deal. It's the management team, the management team, the management team, the management team. Have you been able to scale a deal in the past? If you haven't, you're probably not qualified for institutional capital. It's just a freaking fact. I mean, the second part is that it's the business model. It's how much money has been invested to date, how long that you've been involved in the process, how much capital you have raised, how you've deployed it, how it's actually. Did you raise 500 grand and spend 300 grand of it marketing your ICO? That's not an institutional deal. I mean, the fact of the matter is that you have to be able to show. Very few institutions are willing to do the seed round or the A round, but they're willing to do the next rounds once that you actually show real progress. But it all begins and ends with the management team. And
I think from this panel, that's the first time I've ever seen a consensus who are so strongly agreed on any point that I've ever raised. It's to get you guys to invest. It's the management team, the management team, the management team. Yeah. Okay. Well, we've learned something out of this today. Okay. Question. Thanks, guys. Question.
I'm going to lead with a question, but I'm going to dangerously say, Jeremy, this was the most frustrating panel
Yeah.
from the questions that you asked, because I think they were trap questions. And I think you put people in. The difference, in my opinion, between investing in crypto ICOs and blockchain companies is very distinctively different.
Okay.
If you're a venture fund and you're raising money from your Aunt Emma, that's not the kind of fund I ever want to invest in, number one. But two, if your Aunt Emma's 22 years old and has a long history, her risk profile may be such that she can invest in crypto because she has a longer risk profile. If she's 60, you shouldn't even be asking the question, should she be in crypto? So some of your questions, I think, put these guys in a bad position. Dennis, I've known for 20 years. He's a pain in the ass, but he's taken companies public. Mike's put money in 60 companies. Alex, so I don't know that I have a question as much as a lot of the conversations around this community are frustrating because the confusion gets out there and the premise is wrong. And then last, we're doing a bunch of business in Malta as well. Our decision there was jurisdictional. Our team, it doesn't matter where our team is. We looked at Singapore, Cayman, BVI. We looked at the place that gave us the best jurisdiction because if we're trying to raise money, we want to be in a regulated environment because that gives us more trust for the investors. Cayman doesn't have a regulatory environment for ICOs. I don't want to be there. I want to be somewhere where we look like we're trying to do the right thing. So again, I don't know that I have a question as much as a comment. I may get stones thrown at me, but I'm going to give you the mic back.
No, that's cool. The questions are designed to tease out the answers in case we've got people in the audience who want to know how to frame their investment.
And
So this is a panel.
Well, I guess the question is that who's trying to raise money institutionally, and what questions do you have? All right, go ahead.
Okay, yeah. That's cool.
Thanks. So my question is, when you're making a decision on an investment, would you rather invest in a project from where you can cash out really quickly and thus damaging the coin economics of the company, or would you bet on the long-term sustainability of the project, and how do you evaluate each of those? Yeah, how you evaluate it?
Yeah, absolutely, and that's I mean, as part of a broader comment towards the points raised. I think we think about investing right now in terms of this is crypto, this is not crypto. There's so many shades of gray within that investment spectrum, and there will continue to be even more shades of gray as this develops and as this kind of grows longer term. The way that we think about investing is traditional VC mindset. So we're looking at teams that we can get involved with early, that we're looking at teams where we can help them grow. We can invest in tokens, and we have in the past, but we also we like to take equity positions so that we can pivot with the company, so that we're not forced into a token sale at a certain period of time, so that we're not, if you actually do an ICO, you're often setting kind of an artificially high barrier to entry for your token in the first place, that people need to derive a certain amount of value from it on day one for it to be worth it to them. So, I mean, the way we think about it is, what are these going to look like? We have no idea what this industry is going to be in 3, 4, 5 years. Nobody does. The only thing that you can do to defend against that is position yourself as flexibly as possible via both vehicles and via capital raising in order to be able to pivot and position yourself where makes sense for that exact time. So we think long term, but you have to be able to act in the short term, I think is the way to think about it.
I mean, just understand this. If you have not scaled the business in the past, you are on a very short runway. The institutional investors are looking at you, and they're grabbing other CEOs' resumes, getting ready to replace you. Because at the end of the day, they're going to give you so much amount of money, they're going to give you so much amount of time, and if you're not doing what they think that you should be doing and scaling it, you're going to get popped. And that's just the reality.
So last year, May till December, let's say, we always committed to a year to stay in. But as we saw everybody exit, and you had 400 and 500% up in the first week, and then it would go closer to the price of the ICO, we had to also exit because we lost faith in the market. And well, the project needs time to build. That's why all the tokens are called shit tokens, because they're all in the shitter, okay? We don't want to admit that, but that's what most of them are below ICO price. I had 182 ICOs present at my conference over the last 12 months, and they're all 1 to 10% today valued. Those that got listed, which was less than 25% even got listed. So it just depends when.
We
You're
had a
talking
figure
today.
earlier
The last
today-
investment we made of 2 million, we know it's going to be years from now that we
la-
may
the
see
last,
a return.
The last panel gave a figure of 99% of all coins out there are worthless. That was what we heard an
They're
hour or
not
so ago.
worthless. They're just not valued because
Okay.
everybody got scared and everybody sold them or converted their
Max,
tokens.
do you want to answer that question? It was a good question.
Yeah, just briefly from my perspective, I've always been an investor in deep technology, so infrastructure level technology. That's not a short-term play. So we don't think of ourselves as traders. We think of ourselves as long-term investors.
And
Yeah.
just one more thing to say as well is that the whole nature of crypto, because it's one vehicle essentially that is the user and the investor, it's not like stocks and users where you have an equity holder and then a user of the product. The way we should be thinking as investors is, or the way we do think is when we're exiting, we don't want to exit to the public market. We want to exit to a big scale user of a platform. And that's the best for the teams that we're working with, is we can find a big chunky buyer who's actually going to deploy those tokens on the platform in the most useful way possible. An insurance company on an IoT platform, something along those lines. Those are the exits that we're looking for.
I mean, we have to understand this is the beginning of the beginning of the beginning of the beginning. I mean, we have less than 1% of the actual investment population actually in crypto right now. So blockchain is inevitable. Cryptocurrency is a layer on top of blockchain. And it's inevitable that we're going to start seeing some mass adoption over the next 3 to 5 years that is going to be not unlike the internet. I mean, to where that everybody made all these grandiose projections and it looked insane when they were doing it, and then they actually happened. And so, you know, yeah, there are some, I guess, what we're calling them shit coins out there. I mean, at the end of the day, management counts critically important because, you know, despite whatever the best business model is, a bad management team can screw it up. A good management team can adopt and adapt to and leverage on a network that they've already developed over years and years and years to help them. I mean, to become more successful.
What would be your main bet? To bet on the technology or to bet on the business model? Which of those two is more important to you personally?
I mean, at the very beginning, it's the management team. I mean, and the whole idea is, as I told you before, I mean, if you don't have a track record of success, if you don't have a track record of scaling a business, and then it becomes the business model, the technology, but you're on a short runway. I mean, because if you're going to take institutional capital, I mean, and these guys are really smart guys they're really here. They're family offices, institutionals. They're there to leverage their network to help you. But if they see that you can't scale or that you can't step up to the plate and actually produce, you're going to get popped. And I mean, and they're going to put somebody else in your place. But
Okay.
I mean,
Yeah, if you could. Thanks a lot.
Hi, thank you. Hi, Mark Steven Meadows from the Seed Token. Curious to where we've got this kind of high-class problem right now. We're pretty excited. Outlier Ventures has backed us. We're publishing a utility token. We waited a lot longer than we thought we were going to do to actually have the public offering. And then we thought, oh, maybe we will go for an STO. But at the same time, we have partnerships, and the economy itself is now generating enough value that we're wondering, do we even go for a public sale at this point? So what's your advice? Do we do hybrid STO utility? Do we just hold off? What would you do in this position, please?
So
Thanks.
I think it's a interesting kind of developed roadmap, and it speaks to a broader trend within the industry. Is a lot of people were midway through their plan for a public raise and have kind of pulled back on the trigger. And a lot of people have ended up raising kind of in a more traditional model of raise, build, raise again. And so we're huge fans of the build portion of it. 2017 was kind of the two guys in a white paper. Now everybody's got hundreds of millions of dollars. And then 2018, everybody did something magical. They shut up and they built technology. And it's amazing. And so we're really loving the types of projects that we're seeing right now who have sort of gone back to the bootstrap model of we've raised a couple million, we've got a great team, we've got an MVP, we've got some adoption, we've talking to a couple partners, we've got a couple POCs, we can see what we're actually getting involved in. So I think it depends on where your tech roadmap requires and whether you are generating network effects out of what your token is using. If you're if you are using it as a fundraising mechanism, that is one side, and then it's more on kind of what do you need the money for, what do you need the team for. If you are generating a network that relies on adoption to generate value, potentially having a raise that requires people to buy that in advance can hamstring that. Give it away, generate some value,
Airdrops.
generate some adoption.
Yeah.
So it's a little bit upside. I'm happy to talk to you after about sort of where you're at, but I think you're doing the right thing.
I mean, at the end of the day, I mean, do you have a real case for blockchain? I mean, if you don't have a real case for blockchain, then you're just in data management.
That's great news. That's really great news.
Yeah. I
So
mean,
you're actually looking at the underlying tech.
yeah, I mean, the whole
Yeah.
idea is that going, I mean, if you can do it with a data management system opposed to blockchain,
Yeah, do
you're
it.
not blockchain.
Yeah.
You don't need to do an ICO. You should do a private equity or venture capital deal. And that's just the fact of how it is. I mean, everybody's trying to stick STO and ICO on a lot of crap that is, it's not blockchain. It's not blockchain, and it doesn't validate blockchain. And if you can raise money, I mean, you should raise money outside blockchain or STO or ICO. If you can be replaced with a data management system, then you're not blockchain.
Yeah.
All right, so I would definitely avoid a public sale unless you have a very big community and that community was whitelisted. Okay, Gibraltar Blockchain Exchange did this perfectly. Okay, they went to 2 exchanges, they got their account holders to be whitelisted, and that's why they were able to close in 9 seconds, 6 million. But the first 21 million was private. Okay, so off of the hype of look how much we raised privately and look what we're building and look what we're doing, they were able to get the last piece from public. So that's the best model if you have enough of a story with outlier ventures and so forth, and because otherwise you're going to spend money marketing it somehow to a small community. You're going to get, let's say, a few $100,000 and you're hoping for 10 million. You're going to be judged based on that, and nobody reads those news. Nobody writes about that anyway. It's not like 6 months ago people would write you raised 50 million and then you would get the hype of it. When you got listed, you would have the benefit of those who didn't get it, and that's why the price would go up 300, 400, 500% in the first week or so. So there's no more reason to have another product other than building your technology that you have to worry about in the PR sense. That's my advice.
Max, yeah.
Yeah, I would really agree with Mike on this one. You've got to look at the market backdrop. It's a very tough time to be raising capital, whatever the mechanism you're using. Doing a public round, I think it's very, very difficult. A lot of hard work, sometimes for very little gain, and Mike's right. You'll be judged against that. On the converse, on the flip side of that, if you have a small number of buyers in your token at the private stage, you always run concentration risk and the fact that those people may be flippers. So you have to choose really wisely, but I would avoid the public round if I were you.
Okay. I think we had another question in down here.
Sorry? No.
Mike,
But I'm really brief. So the question
Mike's
is,
hungry. I can tell you, Mike's hungry. So.
I will see that. So many people think that utility tokens today, or in general, they have no intrinsic value. So if you would invest in utility tokens, what would you be looking into? What would be the criteria? What would be your exit strategy? Especially now, if you look in the situation on the markets. And if you do that, do you also require to be invested in equity as well?
Yeah, so most of the recent transactions have been equity-based, and we also want the token. Because we got sold on the token idea before, and then they all switched to, okay, here's equity, give me cash. We say, okay, give me the token just in case. One day you may be listed, one day there'll be some, that's like the bonus of today. So it's all based back to equity.
I mean, at the end of the day, I mean, utility tokens are all about usability and utility. I mean, if they're not being used in the marketplace, they're useless. I mean, you're betting on air. If it's a utility token and it's a real utility token, that means it should have some utility to it. That means usability, transactions, things should be going through, and it should be happening. I mean, on an escalating scale. Otherwise, you're betting on something that is just air. I mean, it is. It's a dream that hopefully that someday it will come true.
Yeah, and to go a step further as well, if it's a utility token, we really need to understand what happens when that utility token hits the end of the ecosystem. So when it gets to an end user, what are the incentives to turn that around and put it back into the economy? Or is it always just flows from one end to the other and out again? Because there's not much value in that. What logic are you building into that token? Because if you're going to have a token model, you need to explain to me why I shouldn't just rip that token out and use the underlying coin for Ethereum or Aeon where we build on. So what actual decentralized logic, and how are you enabling people to act in a way that's different than they can in the current world today? And I think that's probably the biggest value of a token, is when you can enable somebody to do something different via logic that's built into it. And when it hits the end of an ecosystem and turns around and gets put back into it. And there's tons of different models for that. There's mint and burn, there's discount, there's tons of different models that work, but you need to have one, and you need to have thought through all the stakeholders, all their incentive maps. Sometimes it's too high of a token value as a deterrent from adoption. I have to think through that as well, and we certainly think through that as a venture capital fund. If there's going to be incentives to keep the token lower, that hurts our return, but could increase adoption. So there's a ton of different ways that's different than traditional equity for investing.
But if I'm going to invest in, or if you're going to invest in an equity token, are you investing in the token or are you investing in the share?
I mean, it depends on how it's structured, I guess, and whether it's back to Dennis's point of, is this a utility token that you've wrapped in a security framework to cover your ass? We do actually similar to Mike. We try and take equity positions so that we can be flexible and pivot with the company. But the actual token itself, in a truly blockchain ethos environment, the token itself is not a share. It's not, we're trying to get rid of the shareholding class of the actual platform itself. You are a owner of the network by using the network, and it doesn't have kind of a share class that captures rent off the top of it. So it generates value purely from network effects and usability.
So is the logic that you'd invest 50% in the share and 50% in the coin? Does that...
I mean, as far as we're concerned, it's like, I mean, nothing has changed. I mean, the world has not been reinvented. Private equity, venture capital, tokens, businesses are all valued based upon the same premise. Management, product, revenues, expected, projected revenues. I mean, everything has stayed the exact same. The only difference is that obviously there has been some magic dust out there for a while where that people got funded for hundreds of millions of dollars on deals that, were
flaky.
An idea at the best, but now we're getting to the reality to where that we did the big upswing, we did the big downswing, and if you learn from history in any way, shape, or form, you learn that in 2001 and 2008, the people that bought down here, when everything was super cheap and everything was super negative, they made tremendous amounts of money. So the idea is that blockchain is not going away. It's taking over the world. It's going to be bigger than the internet. Every single transaction, every single piece of recorded document is going to be on blockchain. And then there's going to be a layer of cryptocurrency on top of it. And the people that get involved in a significant way now are going to be huge winners. buying after the everything has gone up 1,000%, as what most people do, is the loser's way to do it. I mean, you got to have some balls to be able to buy when things are down.
Yeah.
And the smart people with real vision that understand that this is going from the fax machine to the internet. I mean, that's about the best analogy I can give you. And that is changing the world. And it's going to change the world in a significant way. And the people that are have the balls to be able to deploy capital now. I mean, obviously you got to do your due diligence. You got to be smart about what you're doing. But you're going to. I mean,
But Dennis,
these are going to be the big winners.
I still don't quite understand how you decide I'm going to invest in the equity token, or are you going to invest in the equity and go and buy some shares? I don't know. Maybe Mike can just answer that one.
It's very simple. You could look at the token as the benefit, the secondary benefit, right? So back in investment banking, you buy a share, and you also negotiate in the investment contract an option or a warrant. That's
Yeah.
really the way we look at it, right? So you value the company, which is still a guesstimate. You invest in it, and then you also take the tokens. So you could say, 2 tokens for 1 share of the equity. It doesn't matter how you look at it. It's just benefit
you're gonna
if
look
they're
at-
going to ever.
Yeah. You're going to look at each proposition in real detail
Right,
and
because-
see what it is you're buying
Yeah.
or investing. Yeah.
Yeah.
Okay.
The evolution is going to be the tokens are going to be equity. I mean, at some point in time, that is what's going to happen. That's what all the institutions want. They don't want a 2 system to where that you can buy equity and you can buy tokens. They want the tokens to be equity.
Yeah.
I think we're out of time, and lunch is coming, so.
One last comment. Yeah.
This is again, I'm sorry, as much of a comment because Mike knows this. What we did with ours is we structured an equity investment, and then we put the tokens off as an optional rider, almost like a warrant coverage. But by putting it off book as an option, you're not delivering the token, so there's no liability. They're not investing in an ICO.
Is that a SAFT?
SAFs only work in the first round. Once you get into B, C, and D rounds, SAFs
Yeah.
fall apart.
Yeah.
So to think of a legal structure, you invest in equity, negotiate your valuation, you're on the cap table, put the tokens as an optional rider that can be called at a later point, delivered into a special purpose vehicle at some point in the future when the world shakes out and we know where the laws are. Right now, when you take possession of a token, you take possession of that liability, and you shouldn't have to do it. So we just bifurcated out, stuck the tokens off as an optional rider, called it a liquidity token, and they can execute on it at some point in the future, but still have the equity. Separate them.
As a lawyer, the closing comment, I love to hear the law's not certain, because that's where we guys make the money. Right, I think we're out of time. Thank you very much indeed.
Thanks, everybody.